U.S. can't raise interest rates to a degree that the real rates will be positive. So that's nominal interest rates less inflation, real inflation, not, that nonsense in the CPI. Say they hiked it, 50 basis points or 75 basis points, because right now it's, they're not 50 basis points. They're trading much closer at 25, like no rate happened in last year. So it's still negative. You're still getting a better return with gold.
Silver investors could make a fortune. Billionaire Eric Sprott and other top gold analysts predict that silver will dramatically outperform the yellow metal. In order to maximize your exposure to silver, consider shares of Golden Arrow Resources trading on the TSX Venture under GRG and the US as GARWF, where insiders have accumulated 50% of the company, and billion-dollar giant Silver Standard Resources has taken an 8% stake in the company. This company has 250 million ounces of silver resources and is headed up by the one man who's responsible for the largest silver deposit discovery in history. Learn more at crushthestreet.com/silver100.
Hello, everyone, and welcome into crushthestreet.com. I'm sitting here with Chris Marchese on the line. He's a senior equity and economic analyst for the Morgan Report, and really he's a leading expert in the precious metals community. The Morgan Report has just been a valuable resource, actually, to me and my own education, my own knowledge, especially getting into learning about precious metals and specifically the mining sector. So we're going to have a conversation today with Chris Marchese and pick his brain a little bit here. A lot of craziness on the geopolitical and economic horizon. Lots to talk about here. Chris, thanks for joining me.
Great to be back.
Chris, the last time, the first time we talked back in November of 2015, it would have appeared to have been the bottom of the resource sector. And I want to get your thoughts here before we start talking about the BREXIT and the interest rates. I want to get your thoughts here on what is going on with the metals. Obviously, over the last 6 to 8 months, we've seen a lot of things change. What are your initial thoughts on what has been going on here?
Well, really, we've seen the bottom of the bear market in the precious metals, which has been going on for the last 4 or so years. And, this is coinciding with the world economy just tipping over. And not that it wasn't tipped over before, but they were able to hide it through all their gimmicks in government economic data and whatnot. But now it's just so bad that they can't hide it. So, we're coming off the bottom, but at the beginning of a bull market, it's going to take a little while. It's a little slow going, especially now that we're in the summer.
Gold is acting like gold here as a fear trade, as opposed to back, during the bear market, we would actually get bad news and gold would go down, stocks would go up.
Yeah, and on the silver side, you've got really depressed lead prices, although lead and zinc are holding up relatively well, but copper, 26% of silver production comes from primary copper mines, and those are in trouble with it just hovering around $2 a pound.
Chris, let's talk about the Brexit. We got this vote here coming up, and what are your initial thoughts on this? What will this mean for the markets, stock markets, and what will this mean for gold and silver, or does it even mean anything at all? Does it matter whether Britain is, leaves the Eurozone or stays in it, or is it just a sign that the system is failing?
Oh, it's a sign that the system is failing. So, yeah, it's completely psychological. There's no reason that you have to be part of the EU. I don't know why the EU exists. If you read about how it was formed, it was, there was a lot of threats. For example, France said, Germany, you can only have your reunification if you join the EU and adopt the euro. So, and the euro was going to fail from the start. There's no reason for it. And to to have a one central bank is just kind of ridiculous. Not that you should have any, but one for all the European countries is a little ridiculous.
Yeah. Chris, so what are your thoughts here regarding it trickling into the market? What's that psychology going to do here? Are you concerned about what will happen to gold and silver? And what do you think might happen with, equities?
So on the general equity front, if it passes, I would think equities would really take a hit. But if, on the other hand, gold and silver would really get a boost. I mean, I could see $1,400 gold in short order and $20+ silver if the Brexit passes. And if it doesn't pass, it's going to be really close. So I don't think the metals would get hit from that, because it's already showing that, there's a lot of people that want to, or a good portion of Britain of the UK that wants to exit. So, and, the polls are showing it's very close. Some have stay slightly ahead by a few points. Others have leave slightly ahead by a few points. So it's going to be really close.
In Europe right now, the banks are suffering due to negative interest rate policy. And it's interesting because the banks are the biggest, most powerful entities in the world, yet we're seeing a direct impact to where they are suffering. All of this monetary policy and fundamental manipulation is sort of coming to a head here. And it's this dysfunction at the top that is just bursting at the seams here. Now we have, the Fed interest rate hike potentially on the horizon here. And I'm wondering, a lot of people are concerned about gold. And if we do see higher interest rates here in the U.S., that the higher interest rates, say in bonds or elsewhere, will attract dollars away from gold, which doesn't bear interest on the surface. It can go higher, but it doesn't bear interest. So what are your thoughts here with gold and, central bank policy going forward?
So normally that what you said would be true, but the fact of the matter is, especially the U.S., can't raise interest rates to a degree that the real rates will be positive. So that's nominal interest rates less inflation, real inflation, not, that nonsense in the CPI.
Right.
And those are very negative. So, and let's say they hiked it, 50 basis points or 75 basis points, because right now it's, they're not 50 basis points. They're trading much closer to 25, like no rate happened in last year. And, so it's still negative. You're still getting a better return with gold. And let's say they hiked it over time 200 basis points. So maybe you're getting a little bit of a yield. That would send the economy into a tailspin. I mean, it's not growing now. It's contracting, even though, reports are saying it's growing 1 or 2% or what have you. I mean, it's not. And so higher interest rates, I mean, they'll cause, so much upheaval, especially, you got the economy, but you also have the derivatives market, which is greater than 1.2 quadrillion worldwide. And the majority of those are interest rate swaps. We don't know how it's set up, but say interest rates, the market started determining them. I mean, that could be the beginning of the end. Everything's just so fragile right now. I don't think what you're referring to is any of a worry. I mean, the market's even thinking that or knows that at this point.
Yeah, and I think a lot of people are coming to that conclusion that you just articulated there. Chris, do you see inflation or deflation as the likely result of all of this? And, if we do see interest rates rise and, let's say the dollar gets stronger, foreign currencies go down against the dollar, we have these, credit problems, these debt problems exploding. Do you see that as deflationary or inflationary going down the line here?
Well, I mean, you're going to have both, because the central banks throughout history, which it's not a long one, they react to deflation by inflating. And, a lot of times, over 500 times in the 20th century, or 21st century, hyperinflating. So, it's going to be inflation. I don't think it'll end up in hyperinflation. I think a lot of the major economies would do either some kind of monetary reset, replace it with their currency with another, or devalue it overnight, like we saw in Mexico in the 90s with the peso crisis.
Yeah, no, it really seems like they're just out of options, and we know deflation is not an option that the central banks want, and it's almost as if at this point, inflation or even a high rates of inflation would be, what they want, and they can't get it. They've been trying to give us higher rates of inflation, and they're failing to do so, with their policies, and the markets at this point seem to be fighting that trend, at least in the short term. And like you said, I mean, the reaction will be inflationary. Chris, do you have any thoughts as to, oil and the markets? I mean, we just hit $50 oil, and, it would appear that oil is going up directly as a leader with the U.S. stock markets. Do you see oil continuing higher here into 2016, or is economic factors going to likely turn oil in the opposite direction?
Well, so oil, and we have to remember that oil isn't primarily for industrial purposes. So the main reason why we use it is for energy. And so that makes it a lot more attractive in any economic environment. And if you go and look at the debt to equity ratios of the major U.S. E&Ps, I mean, they're astronomically higher, and a lot of them can't continue to even service their debt without $80-$90 oil. So unless it gets up there really quickly, I mean, I suspect we will see a lot of defaults towards the end of 2016, first half of 2017, and that should really give oil a boost because it'll take a lot of supply offline.
Chris, let's get your thoughts on gold and silver here. Where are they going to be going forward? You mentioned $1,400 gold, north of $20 silver here. Where are your targets? I mean, what ultimately, where do you see those metals going before you consider selling?
Oh, I can't even put those into numbers. I mean, because I don't think it'll be measured in U.S. dollars. It'll have to be measured relative to other hard assets.
Well, this is an old stat, but I remember Robert Kiyosaki telling people that he believes that you're going to be able to buy single-family homes for 500 ounces of silver. Which isn't that much money nowadays. I mean, it doesn't take that much money to purchase 500 ounces of silver. And, he believes that, you're going to be able to buy single-family homes. Do you see that as a realistic metric, or is that a little too far out there?
Anything's possible. I mean, it all depends, to what degree the system collapses, because there'll be a run to these two hard assets, which have been money for thousands of years.
Yeah.
So, it really all depends how things play out.
Chris, let's get your closing thoughts here. When it comes to the miners, we've seen them outperform gold and silver. I mean, they've been a leading indicator, and how important is it for them to continue to move forward the way they are? And, what is the opportunity going to look like for the people that are getting into the miners now and going forward for the next 3 to 5 years?
Oh, the gains will be just astronomical. I mean, we've just started. And I mean, in the very short term, unless the metals break through 18 and 1300, I think the miners have rather limited upside because they are expensive relative to current spot prices. But, they're leading indicators, so obviously they're forecasting higher prices, but I think those higher prices will need to come before we see any material movement higher. And the more likely scenario is a retracement. It might be very small. But, a lot of it depends on, this Brexit vote, because if that goes through, gold and silver should take off quickly, and the miners should follow suit.
Buying the miners now, would you say we are below where, the miners will ultimately peak, and then following, that crash point, how the whole system, the miners are cyclical. So, after they go up and then they ultimately crash again, would you say that we're still below where the chips will settle after the next crash?
Oh, I think far below, because I think after the next crash, I think the metal prices will be significantly higher just because of what will happen in the global economy.
Yeah, no, I mean, and it, for me at least, that's what gives me a lot of safety purchasing now, because it lets me know that, I do believe that ultimately metals prices are going higher, and we're not likely to, ever see them come back down this low again. So, the opportunity is astronomical. Chris, I want to give you an opportunity to just give us some closing thoughts here and words of wisdom for our audience. And, if people want to learn more about what you do and the work that you do, please let them know where to go and what they will find.
Well, some words of wisdom. I mean, most of your listeners probably already know this, but, have a portion of your assets, 10 to 15% or more, in the precious metals, just as an insurance policy. That should help you sleep better at night if you understand what's going on around the world. And if, once you have your physical position and you want to learn, or you just want our take on what's going on in the world, the metals, the miners, just visit themorganreport.com, and you can sign up for a free email list, see what we have to offer there, or you can try it out free for 30 days.
Yeah, no, I couldn't, recommend these guys any more than, anyone else. When it comes to investing now, maybe you've sidestepped a lot of the brutality of their bear market if you're just getting into it now, and you've been lucky not to be a part of the mining sector, prior to 2016, from 2011 to 2016 or 2015, it was pretty brutal. But I mean, getting in now, this is an opportunity of a lifetime, and these guys are top notch. David Morgan, Chris Marchese, the team there, top notch guys. So everyone, thanks for joining in today, and Chris, thanks for coming on the show.
My pleasure.